6 key events to watch for real estate in 2022. Disclaimer, whatever I've shown here are collected over the all the past transactions collected. The data are the past. Future we cannot predict, but with past transactions we can foresee the future. Here are the 6 key events to watch in 2022. I believe this year there will be a lot of challenges even for home buyers, home sellers themselves, because you don't know whether now is it the time to sell or is it the time to buy. Okay, because there are these 6 key events happening all at the same time in this year in 2022. Okay, mainly Russia-Ukraine war, stock market crash, the rising oil price, inflation, okay, rising interest rates. This one is quite obvious. Now the fixed rates are all going about, I think 2.25 already. Fixed rates for those fixed for 2 years and fixed for 3 years. Banks are already calling this kind of rates already. And lastly, our ongoing pandemic. Okay, now that we are already we have passed 26th of April, so now we no need to use the trace together token to tap. I will share more insights, okay, on all this. We will be more actually informed and more certain how is the market going to move from here onwards. I'll start with this first event that I want to share. Okay, the war, Russia and Ukraine. We have been hearing a lot of news, and this war started some time back already, I think close to 2 months plus 3 months. And the war don't seem to be ending anytime soon, okay, with sanctions here and there, or country blocking certain countries on all the delivery of all the goods and services. Looking at it, when we look back at the effects of war on Singapore real estate over the past 20 years, from year 2000 onwards, if you look at it, last time we have the Afghanistan war, we have the Iraq war in 2003, then the Syria war, the Yemen conflict, all this. So all this and followed now, we have this Russian-Ukraine war. The effects that we can see straight from the chart itself, as long as there's war, the prices will continue to go up. This is just based on past trends. You can see that with war, prices will only go up. And when we look at because this chart here, we superimpose the war and the global financial crisis, the data points, we put them together. When we look at it, we intersect the dates, we realize that for economical crisis, more impact will be on the property market than war. Okay, war is not so much of an impact. We shouldn't be worried about war now. Okay, and when we look at the effects of war, okay, when we look at the volume itself, when we look at the volume is higher. Every time there's a war, the volume gone higher. Everybody has this thinking since there are war out there, stock market confirmed going to crash. I put all my money into real estate. Okay, which is a safe haven. When you keep the real estate for long term, definitely with inflation, your real estate will go further higher in price. Next, let's look at this event number 2. Okay, stock market crash. Everybody is like waiting for stock market crash before they buy anything or whatever. Sometimes you ask yourself, is it worthwhile to wait? Likewise, waiting for real estate market to crash. All this, when you look at the data point, you look at this stock market and property market. You look at the attacks. Okay, for this first one here is the 911 attack. You see the recovery for all those events, for the war, the financial crisis, and let's say our COVID. You look at all these events, they are all very, very short term. Okay, short term. And then you look at the recovery period is on a longer term period. Looking at it, right, don't get affected by all these crises. Believe in the stability of our real estate market in Singapore. The recovery will definitely pay more folds than the crisis. If now you think that the market is already on the high side and you feel that the market is not going further higher, then you hesitate and you don't want to buy. But if you are a home buyer today, or rather you are a home seeker today, looking for a roof over your head, you can't possibly wait for the price to come down before you buy. You have no choice. But with this data in presented to you, you can see that if you buy in today, and for any home owner, when you buy a property today for own stay, we wouldn't move around within the first 5 years, I would say. Usually we will stay minimally of 5 years and beyond. When you have kids and all this, you will be more settled. You will maybe upgrade to a bigger unit, maybe 8 years or 10 years down the road. When we look at property cycles, you look at the time period, seriously, all 10 years, you can see the spread is, if you stay there longer, definitely you will not be hit by, as in the downward movement of the market. You will still stay there through, and you sell it when it appreciates further. That's one thing for sure, that Singapore property, be it the ups and downs, okay, the ups is always higher than the previous high. That's why we should buy a property in Singapore, stay for longer term. And as I shared earlier, when the market go downturn, the safe zones will be invest in stable assets. Stable assets, real estate is definitely stable, all right? Because for real estate itself, because of its illiquid, it is not so easy to dispose of in the market. And even if you can sell it fast in the market, it will take 3 months before you can get the money back. That's one reason why stock market can crash overnight, but not real estate market. This is one thing that if you understand it correctly, if you have extra money, all this, put it back all into real estate, because real estate will definitely pay it back to you. All right. This part here on the ups and the down, I was trying to say we have more uptrends. Okay, if you remember this chart that I shared earlier, we have more up period. Okay, more up period than the down period. Okay, down period is very, very short. As if you buy a property in whole long term, you will hit more up period, whereby anytime you want to cash out during the higher trend period, you can cash out. So that's the beauty about real estate investment. Okay, next thing, point number 3, third event on the rising oil price. Okay, as we all know, oil prices went up now. Okay, because of war and all these things. When you talk about oil prices going up, basically oil price will affect all our transportation costs. Okay, transportation costs, when you transport costs go up, definitely your construction costs will be up also, because they need to transport the sand to and fro all the locations. Okay, deliver sand, cement, and all these things. And with these two prices going up, home prices definitely will go up, because developer won't be selling you lower than their original cost price. All these are their sunk in costs already. These are the costs that they already need to pay. Definitely they need to, when they develop a property, they develop a new project, definitely they need to earn money. If they develop and don't make money, then what's the point of developing? Basically, all these costs will be passed on to the buyers. Buyers buying new launches, you got to face it that the prices will never go down. Okay, because the land cost is high already, and development cost is also high. And the home prices will definitely go up. For all new launches, we will be looking at another new benchmark high, and that high will be the new norm. And we do see that with this new norm, all our older resale properties will also slowly catch up on the pace. And I believe there will be another new norm high, most probably 5-10 years down the road as well. Looking at Singapore being land scarce, being a small country, we can be quite assured that our land price will not be low. The fourth event here that I want to share is inflation. Inflation has been, every year there'll be inflation, definitely. But if you look at the longer term, if you look at longer term, like when we use this hamburger here, the McDonald's hamburger, those who are like born in 1970 something one, you realize that the burger then was only like 110 for a cheeseburger. Now cheeseburger 280. Big Mac how much now? Then you see McChicken, McSpicy, McNuggets, all this, how much? What's the price now? When you look at it, that's a short span of maybe 10 years. The inflation is like already 50% more for this kind of our daily consumption product. Then we talk about even like a cup of coffee. Last time, let's say 20 years ago, when you drink a cup of coffee, maybe 80 cents, 90 cents. Now you go to a coffee shop, it's already 150 or around 150, if I'm wrong. It's almost double up already. If you look at things doubling up in prices like that, if real estate price don't double up, I doubt it won't double up. That's the simple understanding of inflation. Okay, things will just get doubled in price over time. If you ask yourself this question, keep the cash in the bank, or you should invest the cash in the asset that goes against the inflation. This will give you a very clear mind. Okay, even if the market is on the high side, okay, I will still put my last dollar into real estate. Let me show you some figures from here. This chart over here on the left is private property price index versus the inflation. If you look at inflation over the years, from 2006 until 2021, the inflation over the years is 32%. But if you look at the private property price index, it is already going up by 86%. This property investment definitely outgrew the inflation. This is why people always say that property is a good hedge against inflation. This is just based on trends. But I believe trends will also give you some assurance that inflation is something that is there forever, and it will not be definite. Inflation will definitely be higher and higher. The cost of things will definitely be higher. That's one thing for sure. The fifth item here is the rising interest rates. This one pretty hot. Since the beginning of this year, January when the Fed say that, oh, we will increase by 75 basis points or something like that. It's at least a 0.75% increase in bank rates. But how much more we won't know, but that's what they foresee will increase. When we look at it, are home prices going to drop when the interest rates go up? Okay, because there are some buyers out there saying that I think with the high interest, property price will sure drop one because people got no holding power to hold. When the interest rate go further up, a lot of people will cannot pay the mortgage. Okay? But when we look at the trends, this is the interest rate and price index move in the opposite direction. Okay? 35 out of 64 times in the last 25 years. Okay? This part here meant that besides interest rates, there are other things that will affect the market. Interest rate itself, if you ask me whether there's any impact, I would say the impact will be very, very minimal because our fundamentals of our economic outlook is very positive. And Singapore now, the unemployment rate is very low already. And then for our Singapore, the vibes that means foreigners see our country, they felt that our country is very stable, good government, and the way we control the COVID situation. I think we are in a very good situation. A lot of foreigners also think that putting money in Singapore is safe. And then this point here I want to share is for the interest rate. If you look at the point here, this was our last high for the interest in 2018, okay, which was about 1.8 something. Now we are around here, right, coming up to around this point really. It's about 2.25 for fixed rates. But you must remember one thing, last time our HDB, or rather now our HDB loans are already at 2.6%. If you ask me, this is still not the triggering point for the market downturn. If the interest rate is going to go beyond 2.6, it is still well below the MAS stress test on our loan. When we do our loan assessment, right, they use this 3.5% interest rates to deduce how much loan we can get. The real stress already done on us. All home borrowers are prepared, based on our income, we're prepared to pay up to 3.5% interest. When I don't see the interest rates going beyond 2.6 and not even 3.5, I can guarantee, I dare to say, don't say guarantee, I dare to say that our property prices will not be affected. Okay, it will definitely not be affected because looking at the past trends, okay, as long as the interest rate don't go beyond 3.5, all Singaporeans are quite safe on this. Okay, and lastly, okay, this ongoing pandemic, I think now we can safely say it should be endemic already. We are outside now without wearing masks, walking around. Even when you go to restaurants, I think now they can open up to more than 10 or 20. You make a booking, they also don't say, oh, you have 10%. I think you cannot, if you have more than 10, you cannot book 2 tables. Now no more. Now you call, you want 30, 50, they also do for you. Okay, no problem. When we look at this kind of virus outbreak, last time we have SARS, we have H1N1, we have the recent one is COVID-19. All these are not so scary if you look at it. SARS, that was the first time we encountered such a pandemic. That time, it was first time in the many years, first time we have such a virus type of attack. The market was shaken. Okay, nobody dared to really step off the house. Then followed by the H1N1, H1N1 period, which is the swine flu from those animals. So it didn't really affect us. Then when the COVID hit again, you can see the trend is going up again. What COVID affect? What COVID changed our behaviors? Because of this work from home culture, people start to buy bigger units. We do see a strong demand from upgraders to buy bigger units. And if you notice, a lot of buyers now out there, they are only looking at 2-bedroom, 2 baths and above sizes. This is a trend that is coming in, and we feel that pandemic, and then now we're already in this endemic situation. You look at the trend, we are definitely fearless already. If you ask me, we are fearless already. The next time, if any of such virus come in, I think we are more or less prepared. I will foresee this even if there's another event of, I think recently or yesterday's news, okay, China again got one more virus come out, H3N8, if I remember correctly, okay, a new virus strain. But not to worry Singapore controlling very, very well. We should have confidence in our property. Buy, hold, don't worry. In conclusion, for today's 6 key events, if you look at these 6 key events, you can conclude that Singapore is very safe for all this kind of long-term property investment as long as you have holding power. That's why just now I stress on this 3.5% interest rate. This is, I would say, it might be the tipping point. If I don't see it going beyond 3.5% this year for interest rates. So I dare say that if the interest rate don't go further higher, maybe next year it won't go much more higher. I wouldn't see any crisis. I mean, as in due to interest rates coming in. And then do ensure, if you are going to buy something today, do ensure that you have done your financial planning and don't overstretch. That's the worst thing. Most of those who can't hold on to their property are those who overstretch. If you never overstretch your finances, even if the interest rate go up to 4 or 5, you can still sustain. And if you talk about interest rate going beyond 5, I think for the past 20 years, it didn't really go beyond. Not to worry, don't scare yourself. Okay. For those who are new to us, do scan our QR codes and get in touch with us. I will try to address more and more of your concerns. As long as you have any concerns on the real estate market, just drop us an email or a note in our website. We will go and research on all the trends and get back to you with a very unbiased overview of this situation. Ken, thank you very much.